All right, good. Can everybody hear me? Good evening. How's everybody doing? Hi, everybody. Okay, we're going to go ahead and get started because if you know me, then I like being on time. So we will go ahead and get started. But thank you for joining this book club discussion on Buy Then Build by Walker Dybel. So hopefully you've had a chance to either read the book or either look at my YouTube channel where I gave a few snippets. Now, a few things about what we're going to discuss today. The first thing is that this is 12 chapters, 12 intense chapters. You are probably going to have more questions than I have time for answers because we are going through the entire book today. Originally, I planned for it to be a series, but we didn't have enough interest in order to do that. So this is going to be very, very high level. I encourage you to go back to my YouTube channel and take a look at each one of the chapters, but ultimately you're going to have to read the book and read the book a few times in order to get the concepts. But I am Darshan Kendrick, the founder of Kairos Capital Legal Advisors. We are a corporate law firm and investment advisory firm where we help founders and funders through the capital raising and mergers and acquisitions process. And one of my life's missions is to create as many millionaires as possible through entrepreneurship, either through starting a business or entrepreneurship through acquisition. So thank you for joining this book club. And you will get a follow-up email if you signed up for this book club about future book clubs that you might be interested in. So anything that involves entrepreneurship, investing money, we're going to have a discussion about it if you are interested in that. Okay, well, I am going to go ahead and get started, and hopefully some more people will start jumping on here. If you are able to and you want to come off of mute and introduce yourself, you can, no pressure. Otherwise, I can go straight into the book. But if you want to say your name and your business and where you're from, then feel free to come off mute and do that.
I guess I can get us started. Hi, everyone. My name's Carlos Emanuel. I'm an attorney based here in Atlanta. I work for an investment firm here in Atlanta. It's kind of a global firm where I kind of deal in basically structuring investment management agreements and doing due diligence for investment deals. So also a friend of Attorney Darshan. So good to see you. Appreciate you organizing this and looking forward to a great discussion.
Yeah, thank you for joining. Anybody else briefly want to jump in and say their name or business?
Uh, Greetings, everyone. Dr. Alanubia. My background is in postgraduate experience in commerce intelligence, business consulting with a background in telecommunications, energy. We're currently building our own data center. Our goal is to help 2,000 companies hit $500,000 in revenue. And we currently have been the owner of a standalone telecommunications tower that we have American Tower managing for us. And we've owned that tower since 2011. And now we are building for edge computing. So thank you very much. I salute everyone.
Thank you for joining us. Anyone
Thanks
else?
for having me.
Hi, everyone. I'm Janine Browder. I am an attorney. I work in-house for a financial services corporation, and I am here not necessarily because I'm a corporate attorney, but just because I'm fascinated by business and I love the book selection. Darshan.
Good, great. Thank you for joining us. Anybody else want to come off mute and say hello to us? All right, well, we'll go ahead and get started with the book because we have a lot of things to cover. So if you're just joining us, I mentioned that the book, as you see, I have it all marked up, is one of those books that has a lot of good stuff in it. So I'm going to go through this book very high level and then sort of open it up for questions and discussions. This really is a book that you can do one chapter each week. But again, we didn't get enough interest for that. So I said, well, we'll just do the whole book in one fell swoop. And so that's why we're here today. So thank you all for joining us. So if you could write down, any questions or comments that you have as I go through these 12 chapters, and at the end, we'll open it up for questions and discussion. Otherwise, I'll never get through the book because it's so much information. But let me go ahead and start that. Just get your questions and comments ready, and we'll open it up at the end. So here we go. So this book is really one of the reasons that I like this book is that I believe even if you're not an attorney or in finance, this gives a good roadmap, like a step-by-step of how to acquire a business. Of course, I've been doing mergers and acquisitions for the last 15 years, but I thought this was a really good book to sort of teach people why it is such a good avenue as opposed to doing a startup business. And so I really enjoyed the book. But let's start with chapter 1. So chapter 1, the name of it is Don't Start a Business. Now, as a corporate attorney, I'm not going to suggest this, but one of the reasons that the author named this is because there's so much information around the lack of a barrier to entry when you acquire a business as opposed to starting up. For those of you that have started a business, it takes a lot of work. You're trying to see what's going to stick in the market. You don't have a proven concept. You have to build a team. If you acquire a business, it's almost like, revenue in a kit. Essentially, because everything is already built out, and you still have to do due diligence and all that in order to acquire the business. But the reason he starts this chapter up with Don't Start a Business is because well over 90% plus of businesses fail. And he makes a remark in here that if you want to become an entrepreneur through acquisition, you need two things. One is you need the mindset of an entrepreneur, which if you started a business, you know how that is. But you also have to have the mindset of an investor, because at the end of the day, you want a return on your investment. And so chapter 1 really goes through the data behind starting a business versus becoming an entrepreneur through acquisition. He talks about the $10 trillion tsunami that's coming because the baby boomer generation is going to be retiring, and they own more businesses than ever in history, and they are going to want to sell that. So it's an amazing opportunity in order to become an entrepreneur through acquisition. So chapter 1 really lays the foundation about why he says acquisitions as opposed to starting a business from scratch. So that's chapter 1. Chapter 2 talks about more into detail how being an entrepreneur through acquisition really is the path to acquiring wealth. So he puts in here that 80% of the affluent are either retired or own their own company. 91% of everyone having over 5 million in net worth owns their own company. And being the owner of a successful business can be a great investment vehicle. So I think a lot of times when people think about acquisitions, they think that they're not owners, but you are the owner of a business once you acquire that business. And so that is what he's talking about. He also goes through what makes a good investment, and he gives 3 things that make a good investment. The first one is figuring out what your return on investment is going to be. And we're all smart on this call to know what that means. Obviously, if you're going to invest in something, you want a return on investment. But how much of a return on investment is something that you need to consider when you're buying a business. The second thing is margin of safety. So every business is going to be risky, even if the business has been in operation for some time. So you need to figure out what that margin of safety is in that particular business, industry, timeline, that is going to make your investment more safe than it otherwise would be. And then the third thing is the upside potential. Every business, if it's doing it right, has an upside potential. Either it's with the people that work there, their positioning in the market, maybe it's a new technology, a product. Finding out what that upside is for that particular business is key to making sure that you get the first thing that we mentioned, which is your return on investment. So that is chapter 2. Chapter 3, I really like because it talks about the CEO mindset. So remember, the two things that you need to have when you're thinking about acquiring a company is you have to have not only an investor mindset, but you also have to have a CEO mindset, because the assumption is that you're buying that business because you want to have some stamp on the operations or the vision or it going forward. So you have to have a CEO's mindset. And I love this quote on the first page of this chapter that says, knowing why and how you will win before you start is critical to know what game you're looking for in the first place. And this is crucial because if you don't know where you're going, there's plenty of businesses out there that you can purchase, but if you don't know specifically where you're going, you will make a lot of mistakes and lose a lot of money. So he talks about the 3 things to focus on in order to create a CEO mindset. The first one is attitude, which I think we can all agree to. The second one is aptitude, bringing on the right people and continuously learning about that particular industry that you're in. And then the third one is action. We can talk all day about acquiring businesses, but if nobody gets off this call and actually takes action to acquire a business, then we're just having a social club. So action is actually the third one. So attitude, aptitude, and action. And he goes into detail with that. All right, chapter 4 talks about defining the target. And this is where it gets into a lot of math. For those of you that don't have an MBA or a math background, it gets into a little bit of math here. But what I really love about this chapter is he comes up with a personal target statement in the book. And he lays it out, and essentially it is a statement about the exact type of company that you want and the exact type of company that you do not want. Because what you want is as important as what you don't want. And so this book really makes you think about, what type of business do I have an expertise in? What type of business do I want to manage? Is it an online business? Is it a brick and mortar? What size business do I want? What kind of revenues and financials do I want from that business? So chapter 4 makes you get laser focused on defining your target, which is the name that we call businesses that are that buyers want to sell. Buyers want to buy, the target business. So that is chapter 4. Chapter 5 gets into the nitty gritty where the rubber meets the road, and this is called the search. So as I mentioned before, there are plenty of businesses out here to buy, but you want to buy the right business, the business that aligns with your target statement that we just talked about in chapter 4. So chapter 5 talks about working with mergers and acquisitions advisors, working with brokers. I have a limited exemption in which I can do M&A brokerage. And so making sure that you have the right people on your team, the right resources to find those diamonds in the rough that match with your target statement is what all of chapter 5 is about. So it's worth really taking some time on chapter 5 so you make sure that you make good choices about your search. Chapter 5 talks about deal making, and this is a little bit of where my law firm comes in, but also other people. So whenever you're acquiring a company, it's not a linear process. It's not A, then B, then C, then D, or 1, 2, 3, 4. It doesn't work that way. Particularly when you're in the deal making space, a lot of times there's a lot of people and a lot of things happening at the same time. And so this talks about the people that you need on the team, how to review the acquisition target before there's a letter of intent that's sent out, and really positioning yourself as the best buyer for that business. And so that is what chapter 6 is about. And take some time really to take a look at that. It also talks about some alternative vehicles using SBA loans and leverage or debt in order to acquire businesses. So you don't need, 160,000 or 1.6 million dollars in order to purchase the business. Side note, for those of you that have not read the book, Why Should White Guys Have All the Fun? It is a book about, what is his name? I'm looking at Reginald Lewis. Reginald Lewis was the first Black billionaire. And at the time, he acquired Beatrice Industries, which was an international firm, somewhere around $940 million. Now, that's nothing in today's dollars, but back then, that was a lot of money. He used the concept of leverage in order to do that. He bought these companies, he divested and sort of spun off different things that weren't in alignment with his vision. But he has a great story about using leverage and being able to generate wealth through the deal making process. So that's a side note of another book that you should read in conjunction with this. But chapter 6 is about deal making, getting your team together. All right, we're almost there. We're halfway there. Chapter 7 talks about, as an acquisition entrepreneur, you're buying the company for the future, but you're paid for the past. And you're probably smart enough to realize what that means, but essentially this talks about going through and looking through a lot of the financial statements of the target company, because you are going to want to base your offer for this business based on what they've done in the past, right? Now it talks about goodwill and some other things that you can add on to just the book value of what a firm is asking. But generally speaking, you are going to want to look at the finances, come up with, based on their past, what is a good price to pay. But you're also going to be looking towards the future, because nobody pays for a business that they don't want to continue making money, or in a best case scenario, scale and make even more money so that then you can sell it for a price in the future. And so chapter 7 goes through a lot of the financial statements and what you should be looking for, and questions you should be asking, and how to get the valuation of a business. So take a hard look at chapter 7 as well, and make sure you take some time to look through that. All right, chapter 8 talks about the seller's journey. So what I love about chapter 8 is it talks about doing a dance, essentially. And when you are acquiring a company, I already mentioned, again, it's not linear. It's not 1, 2, 3, 4. It's a lot of things that are moving along. But the seller's journey really is one that involves a lot of emotion, particularly if they built a business from scratch. It involves a lot of people. It involves a lot of due diligence, a lot of paperwork, a lot of people saying no to this, yes to this, and having to go back and forth. So chapter 8 goes really through how you should be handling the seller in terms of what their expectations are, what your expectations are, and how you get to the finish line, because it is a dance. You step forward, they step back, they step forward, you step back. And you have to remember that the end goal is to make a deal, if it makes sense. And I like how the book notates that sometimes it's lawyers, for those of us that are lawyers on the call, that always tank a deal, because we are trained to be professional pessimists. And one of the things that I remember with the clients that I serve is, we have two different objectives. My objective is to keep everything above board and make sure there's as least amount of liability once you get to the closing table and all the documents are in place and all that. But it's never my goal to tank a deal, particularly if something can be worked out. And so that is what chapter 8 talks about, is the actual dance that happens during the seller's journey. All right, chapter 9 talks about designing the future. So essentially, um, when you invest into a business, obviously you want it to continue or to scale and make even more money. So you have to have, again, a entrepreneur CEO type of mindset. You have to have a vision for how you're going to take this business and grow it so that you are able to sell it in the future. And so it goes through a few models that you can think about. It has some charts in here and some things about how you design that future. And you want to try to design that future before you really get into negotiations, because you want to have a clear path on day one, as soon as the ink dries, how you move that company forward. So chapter 9 is about designing the future, sort of after you have acquired the company. All right, chapter 10, get your questions ready because we only got 2 more chapters here. All right, chapter 10 is really where Kairos, my law firm and investment advisory firm, and everybody that we work with actually comes in. Now you are ready to make an offer. So it goes through, it has a chart about how you make a letter of intent, even though it's non-binding. It does have some items in there that are binding, and it does really lay out what the plan is going forward, and some things that both the buyer and the seller really need to know before they go spend money and time down this road. And then once you get into actual letter of intent, now you are doing due diligence. And I can't tell you how different due diligence can be based on the size of the deal, the industry, the lawyers, the CEO. Due diligence is a lot of things happening at a lot of times. It's a lot of information uploaded to a data room. It is a lot of moving parts, a lot of late meetings. A lot of things are happening. So chapter 10 is all about you have said, yes, I want to buy this business. The seller has said, essentially, yes, I want to sell to you, and you're going through sort of the operational, legal, and financial process. All right, chapter 11 goes into more detail about the acquisition phase. So it talks about getting your financing together, continuing on with the due diligence, sort of the process of removing contingencies as you go through that process and you get closer to the closing date and table. So chapter 11, it goes into more detail, and it is a continuation of chapter 10 when you make that initial offer. And then chapter 12, last but not least, is transition. So you have done your due diligence, got the financials together, the lawyers are semi-happy, and you have signed the paperwork, which is done electronically, not now, without much fanfare, but you have closed on the deal. Okay, what now? Well, now there's a transition period, and some people keep CEOs on for 90 days to help them. Some people kick them to the curb in 2 weeks. But really what chapter 12 talks about is now that you have closed, what now? And it gives you some practical tips about how to deal with the employees, how to deal with the team, because there are people who are going to want to know, who is this new owner? What are we doing? And it talks about how you, as a new CEO, can take 90 days and really get to connect with vendors, with customers, with the people that are a part of your new company. And so chapter 12 is all about making sure that you have a smooth transition so that at the end of the day, you have made a good investment and became an entrepreneur through acquisition. Okay, I know that was a lot in the few minutes that we had. But I assure you, if you read the book, you will get more details about exactly what I talked about high level, and make sure you pay attention to the chapters that I said to take a slow look for. So I'm going to stop talking. For those of you that have read the book, I'm interested to hear your perspectives and add on. For those of you that didn't get a chance to read it, but maybe you saw my YouTube clips, if you have any questions, let me know. And then for those of you that are in this space, fellow attorneys or people who are in the M&A space, please give me your comments. So I'll stop talking and see if there are any questions or comments.
Yeah, Dr. Alanubia here. Yeah, I actually wrote down a bunch of questions. The first question was about the deal structure. I've been a licensed financial advisor since 1994. And a lot of times people can use insurance products as leverage, alternatives to cash. A lot of times people think that the only thing you can do in terms of striking a deal to close it is going to be cash, but sometimes it's not cash because it's not going to put the seller in the optimal position. They might just need an asset that gives them a tax shelter because they already have annuitized revenue, and then they probably bank that for a future generation. So it was and I haven't read the book, but the question is are there any discussion on SPVs in terms of special purpose vehicles, or JVs, or just alternative ways to fund the deal other than I show up after I sign the deal and I'll wire you the amount of money and then I take the business from there. So that's kind of like my first question.
Yeah. The book doesn't specifically talk about SPVs, which are special purpose vehicles, particularly. And that's why, particularly the chapter that talks about, I think, is deal making.
Okay.
CPAs and tax planners are going to be crucial to acquiring a business outside of your attorney, because I'm biased. Outside of your attorney, your CPA is going to be your best friend, because there's going to be so many tax implications, whether you're doing a stock purchase or a asset purchase, or whether you're doing, like you said, you're using some type of vehicle or something like that. I don't give tax advice. I have an MBA, but I don't do numbers like that.
I was going to say, why do y'all always leave the MBAs out? Because most of your CFOs have MBA backgrounds and not CPA backgrounds. I mean, I went to a small school called Wharton. I don't know if you ever heard of it before, but I just sit back and I listen and I watch, and I'm like, everybody talks about the CPA, and respectfully, everybody talks about the attorney, but nobody ever talks about the person who's actually looking at how the deal is going to be structured, in advising the CPA. And I'm going to look at it as a licensed risk manager from a risk management perspective, because oftentimes, and I was in M&A for a number of years, and oftentimes we don't look at how the insurance industry itself plays a crucial role in M&A deals. And I don't think it takes a certain level of sophistication. What I think it takes is a level of awareness. Because at the end of the day, when you want to close a deal, both sides want to be able to close the deal with the limited amount of risk. So in some of these discussions, I don't hear the risk management. And so, to your credit, my challenge as a business consultant for over 30 years has been, the relationship between what I call reactive and proactive consultants. The reactive consultants tend to be accountants and lawyers who react to a situation based on a statute or based on a number. But the proactive consultants, MBAs, like us, if you will, we're kind of looking at once we have this acquisition, what's the change management plan look like? And then what's our exit 3 years from now, 10 years from now, like you were saying with Dr. Lewis, in terms of how he used leverage to spin off and syndicate those assets. So, I haven't read the book, but I kind of been in industry for a long time. So I wanted to, and maybe this is something that's a follow-up. But I think that just to your point about Dr. Lewis, Reginald Lewis, using leverage, there are so many other tools that we can use. I think this past year, the SBA changed the ruling where you can now use SBA or a portion of SBA funds for acquisitions, whereas previously it was a little more prohibitive.
Yeah, and the book talks about that specifically. There's a section on SBA, but obviously the book is is the book. So I'm not sure what year it was. 2018. So it is a little bit outdated. But I know what you're talking about because the book mentioned that there was, sort of this glitch with the SBA, but that's since been removed. So yeah. So yeah, definitely read the book because they have a specific section on that, and it's easier. I think people think that you need like a whole bunch of money in order to acquire a business, but there's so many businesses. Even though my firm works with lower to mid market, so usually like under between 25 million to 100 million. There are many businesses that are way under that. And you mentioned an SPV. You could definitely get together an SPV and maybe invest into some private equity firm that is looking to invest into a company. So there's many ways to pool funds to be able to have a portion of a business that you want. So thank you. I know you have many questions, but let me see if anybody else has a question. We'll come back to you, Doctor. Anybody else? Yes. Questions, comments? Go ahead.
I don't have a question, but I do have a comment. I want to expand on the comments that were made just before, probably both of your comments, but on the proactive and reactive aspect, and this might be some professional bias, but I just don't want anyone to lose sight of the fact that like what someone like Darshan does doesn't have to be reactive. And she probably would prefer that it's not reactive because usually when it's reactive, it ends up in litigation. But if you pull in someone like, so Darshan has an MBA and a JD, so that's like a special box. But the lawyers like Darshan and others would prefer to be in alignment with the MBAs and the CPAs and on the front end instead of on the back end, because it's less, oftentimes less resource intensive and less time intensive if you get a legal opinion and some legal insight and access on the front end and before everything's said and done. And I know we're in like a self-help environment, and sometimes lawyers are like the last people that folks want to call. People think that lawyers kill deals, but we also can help with risk, not the way that insurance can, but sometimes looking out for things that people don't necessarily expect. And so anyway, I don't have anything beyond that. I just wanted to make sure that I know, like, you don't leave lawyers till the end. Like when you are ideating, that might be a good time to reach out to somebody like Darshan.
Yes, thank you. And I did not pay her to say that. But I thank you for that. And to your point, one of the things that I enjoyed about getting my MBA is the collaborative team effort and getting that degree. So I do think, I'm a little different than other attorneys in that I have worked in that collaborative space. So I know what it means to get a project done. And I always tell people, and I'm sure that the corporate attorneys on here can, and others can attest to, I tell people that I am a vitamin. I am not a pill, meaning if you take me before you get your headache, you won't get a headache. But once you get the headache, you can't come to me because I don't do litigation. Like once you're in trouble, I can't help you. So my job as a vitamin attorney is to keep you, from getting that headache, but you have to engage me early on, not when you feel a headache coming on, but really, sort of on a consistent basis to make sure you don't get that headache. But thank you for that, Attorney Browder. Any other questions and comments? I'm going to hand it back to the doctor if nobody else has any more questions or comments. Going once. Twice and 3 times. Okay, doctor, you're up. If you're speaking, we can't hear you. You're still on mute. There you go.
Okay, how about now? No, I like the and let me share my first degree eons ago. I was a paralegal long time ago, so I have much love for my Esquire and barrister friends. So I'm not in the stereotyping business. I'm more black eyed peas and collard greens. So I'm a straight shooter. So it's not intended. My communication is not intended to throw any type of shade. I do appreciate what Sister Kendrick does. I followed her for a while. I think we've been on LinkedIn for some years now, and we've talked previously. So I do admire the value that she brings to the table. Um, I guess really would like to lean back on the leverage, the leverage side. Does the book suggest what types of resources, again, to your credit, to your point, as it relates to Reginald Lewis, what types of resources or what types of strategies, if you will, have you seen effective in closing a deal?
So the book doesn't necessarily talk about strategies. The book focuses on how to keep the deal going forward in terms of like everybody has a role. So you do your role, you do your role, you do your role. If we need to communicate, we do. If we have a conflict, we come and we discuss it. So it doesn't really talk about strategy so much as it focuses on sort of the human part of the process and everybody's role in the process. Now, if you've read Reginald Lewis' book and you want to dive into strategy, because it's his almost autobiography, he does a really good job of talking about his strategies for acquiring the companies that he did. Some really good insights and things that he did in order to become this first back billionaire. So if you're looking for more strategies, his book is a really good, easy read on that because it's a it's a first person account. But this book doesn't necessarily give strategies. It talks more about process than strategies.
Oh, okay. So it's more definitive as a matter of speaking.
Correct. Yeah.
Okay, I got you.
Now, I do have a book that is nerdy, and it's called Mergers and Acquisitions from A to Z. That talks more about, it is more legally operational, but it does talk more about strategy. So if you're looking for, it's a thick book, but it's called Mergers and Acquisitions from A to Z. So you might want to check that out if you want to learn some strategies.
Well, thank you very much for those who remember encyclopedias. I used to eat encyclopedias for breakfast.
Oh, well, you'll like that one. That's
we don't have encyclopedias anymore. We have big PDFs.
we have Chat GPT. Anybody else? Questions or comments? Hopefully this means, that I have at least inspired those of you who have not read the book to go back and actually read the book. And for those of you that have read the book, hopefully this inspires you to actually take action, because nothing we talk about is going to make any difference if nobody on this call actually goes out and starts looking for businesses to buy. It's one of the straightest routes to generational wealth, which is one of my lifelong goals. So I hope that you all do that. Doctor, did you have another question, or did anybody else have a comment or question? Now, you will receive a follow-up email because I do plan to do another book on the psychology of money next month, because I am an investment advisor as well. So I am always talking to people about money. So you'll get that follow-up email. But any more questions? Any more comments?
I had to step away from the computer, but I did have a question. I wanted to know more about can you hear me?
Yes.
I wanted to know more about the SBA and how it supports small businesses. So full disclosure, I joined late. Also, I only got halfway through the book, but the SBA section was quite interesting. I didn't realize you didn't need much to start a business, or at least acquire one, with debt financing. So in terms of the SBA, I guess, how does it really work, especially as an entrepreneur with no business track record whatsoever? I'm not trying to acquire like a very sophisticated business, but just trying to get in the game to just start some sort of revenue generation.
Mm-hmm. I am not an SBA expert. I'm not going to claim to be one. But after this shutdown finishes, the SBA has offices, regional offices. They're very easy to approach. I think there's one still in downtown Peachtree Center. You can book some time to speak with one of their counselors. I would, make an appointment to speak with them more about it, because I don't want to give you any wrong information. And if the regulations have changed since January, I don't know what they are.
Right.
So I would definitely go to sba.gov, figure out where your regional office is in Atlanta, and book some time to talk to them. So I don't
That's
be.
And I appreciate that. And another thing I wanted to talk about, and I'm because I had a list of questions, and I hope that's okay.
Yes, that's fine.
Okay. With acquiring your own, or not your own business, but acquiring a business, like an operating business. Have you done that before?
Yes.
I'm sorry if I missed your bio. I wanted
Yeah.
to.
I didn't go through a bio. I just said welcome to the call, but but yes, and my deals are not anywhere near in the millions. Just so
No, trust me, these are the ones that I want to know about.
So
Yes.
I do a lot, some angel investing and some partial ownership acquiring of businesses.
Right.
So I am definitely not the expert in anything, but I do believe that investing is one of the greatest ways to get to generational wealth. So to answer your question, yes, partially.
Okay, good. And so you've basically invested in an already operating business, not just not acquired one, like how Walker, is it Diebel or Diebel?
Yeah. So
Diebel.
no, I went in with other people to acquire a business. It's just I haven't wholly, written a check.
Understood.
So I went in partially with people, and then I do angel investing into startup businesses.
And I loved the chapter that spoke about having the CEO mindset. Mind you, in my practice, of course, I'm an attorney like most of the people on this call. I've never had to acquire any businesses. I've been a lawyer in deals before, especially on the public side, but never had to acquire any businesses. Someone else said it in the call, or no, you said it, Darshan, where Walker talks about lawyers killing deals. I guess in my partnership, or even I'm I'm a very risk averse person, just like a lot of lawyers are. So like buying a business that's a big step.
Yeah.
So yeah, it is. So I wanted to know more about like having the CEO mindset and how your qualities like translate to the CEO. What kind of qualities did you have? Like as an attorney, I know you have an MBA and that's probably very helpful, but what kind of qualities did you have that allowed you to translate your legal education or your legal skills into the business that you helped acquire?
Okay, so particularly my legal skills, I think it helped more probably during the due diligence process and just thinking methodically about stuff, because as I mentioned before, when you're going through this deal making process, there's a lot of stuff happening and a lot of people making a lot of stuff happening, right? So you have to figure out what your system is to make sure you're checking everything, and making sure, because at the end of the day, even though lawyers are risk averse, if we go through and we are making sure that we're checking what we need to and doing what we need to, at the end, when we get to that closing table, we should have the confidence to know that we did everything we were supposed to do. I can see if we left a check mark out, if we just go through the process. But if you come up with a system and you check every box, by the time you get to that closing table, you should be confident that that you did what you needed to do. Now, there are certain things, and the book talks about this, there are certain things that are outside of your control. Like you just,
Right.
nobody can guarantee anything, but you can mitigate it by doing what you need to do in the due diligence process. And so for me, one of the skills that I think lawyers will appreciate is just how we think about procedure and processes and systems.
Mhm.
Even corporate attorneys, even though we don't go to
Yes.
court, we still have processes and systems and things like 1+1 =2 type of mindset. And I think once you go through that a couple of times, even as an attorney, I think you'll find that it'll get easier because you'll be
Mhm.
like, well, I went through the process. I can't control
Right.
the outcome. Nobody can control the outcome. But what I
Mhm.
can control is the process to get to the outcome. And as long as
Right.
I do what I need to do during the process, I got to leave the outcome to fate, God, whatever you want to call it, because I
That's
can't
true.
do anything. I can't do anything with that. All I can do is control the what I need to do during the process.
Yeah, that's good. And that's the truth. And that's really, and honestly, like that part of the book, it really spoke to me and it resonated with me because like you have to do some self-reflection before you go into something like this. That was really important because of course you have to know yourself before you want to take on a whole new baby, which is
Mm-hmm.
acquiring an already operating business and
Mm-hmm.
how it comes out. I love the fact that Walker uses target statements
Mm-hmm.
and like what you want to do, and then when you take it to a broker, this is you're not really looking for an industry, you're looking for this target statement, like I want to do a product, or a distribution or a service that does this and does this. And I thought that was really helpful
Mm-hmm.
in Metro Atlanta or even in Georgia. Like, have you found brokers to be especially helpful to first time entrepreneurs?
Um, it it depends. um, because and the book talks about this. A lot of times it's harder as a first time person buying
Yes, he
because
said that.
brokers get paid, you know,
By the
by,
deal.
by the deal.
Mhm.
So they're trying to feed their family just like you're
Like
trying to
just
feed
like you,
your
baby.
family, right?
Hmm.
And so, one of the things that I'm trying to do personally and professionally is to create an environment, particularly where people of color can come and get those type of, at least, soft services. So I have a mastermind group that has a financial planner, and we have an M&A broker, and we have a tax person, and we have an estate planning person. And so, we're really intentional about trying to help people as much as we can, right, from our community to find these deals. But it really depends on where that broker is. It depends on the time of year. Like this is the year that deals are getting closed, so you might have a harder time getting a broker than say um, maybe the beginning of the year or maybe during the summertime. It's seasonal.
Right,
So
right.
it really just depends on who you're talking to and when you're talking to.
Mhm. Thanks a lot. That's
Yeah.
all my questions for now, but I think I might remember some more as time goes on.
Well, thank you, Carlos. I think you were going to say something.
Yeah, no, I appreciate that. Just on the point, I guess some of the questions were around kind of financing and like how do you actually get the funds or the backing to acquire a business. I think the important thing to remember in this is like just about anything and everything is negotiable.
Correct.
So you could go to a seller and say, hey, would you be willing to entertain the idea of like seller financing,
Right.
which is, basically the seller stays around, you do payouts kind
Mm-hmm.
of from the profits of the business over a course of time. Um, and so if you feel like, well, capital is a problem, that's a potential workaround. Um, and there are, other institutions out here, obviously everybody knows about banks. It is harder generally to kind of get financing from a bank, but there are, private equity firms or private credit firms out here that are looking for potential opportunities. So I think to the point about like, how do I begin to get the backing? A lot of it is if you identify an opportunity and can work with the existing entrepreneur to develop a plan, they may be willing to kind of work with you to kind of get the financials in order, understand the story, and even potentially help present to help you get financing. So I think, as you're on this journey, the important piece is to really be open to be creative about how do you structure deals, because many times that can feel like a very closed door early on. If a purchase price is $1 million, $5 million, you're like, well, I don't have that, and you
Right.
kind of stop, and it feels like a dead end. So I think it's important to remember, don't let that hurdle feel like a closed door. Have the conversations, loop in some advisors. How can we be creative to find a financing solution? And many times there are, this idea of the silver tsunami that the book talks about. There is a large group of business owners that do not have a succession plan. So
Right.
if you can help them by,
Yep.
getting some liquidity to them, and they'll help you on the, flip side to kind of getting you in a place to be able to run the business. That's the important piece. So I think that's the one thing I want to leave with everybody. Don't let, the initial sticker shock of a purchase price stop you from pursuing this. So
That's very, very wise words. And the book talks about seller financing as an option. But to Carlos's point, a lot of times you see the price and you think, well, how much do I have in my bank account? You need to get creative in terms of how you can finance that. It's worth talking to people, having a conversation. I tell you, financing options get more creative each and every day. You can always go in, particularly with somebody. There's, sort of pooling of funds that can possibly happen as well. So just, come up with your target statement first, and then once you start to see some businesses that align with your target statement that you want, then you can, take some time to talk to people and to really deep dive into what your options are. But to Carlos's point, none of this that we say on the call makes any difference if nobody goes out and actually does what the book says. We're just having a social club, and that's not the point of this. So thanks, Carlos. All right, we got 7 minutes. Any more questions? And I want to bring up this poll here because I just figured out how to do a poll on here, and I'm super duper excited that I just figured out how to do a poll. So I'm going to launch this poll. But any more questions?
Yeah, I wanted to piggyback on what Ryan was saying. The first thing is, in my experience, I always know that you're dealing with a business broker versus a person who's a realtor who happens to have a business broker interest, because the two functionally are not synonymous. There are a lot of people who call themselves business brokers, but they're really realtors, so that's the first thing, for me. But the other thing I wanted to ask is, does the book talk about feasibility? Because, I do feasibility analysis, right? Financial planning and analysis. So does the book talk about feasibility analysis or asset ratios, so that at a snapshot, the owner has a rubric without going immediately to an accountant? They can have a rubric that says, hey, I'm willing to sign an NDA, but I need you to give me, the financial statements and then my ability to look at it as an asset class in terms of this is the cash on hand and then property, plant, and equipment or something like that. Does the book speak to the evaluation of the deal itself before making an offer?
It does. There's a section on valuation. Now, as I always tell people with valuation, there's about 20 million ways to do a valuation. And at the end of the day, value is what somebody's willing to pay for it. That's what your value is. You can ask for 40 million, but if nobody's willing to pay for it, guess what? Your business ain't worth for 40 million, no matter how many times you say it, right? So the book does talk to detail to talk about valuation, different types of valuation models, which you should be looking at, EBITDA or other ways to value, especially if there's like some IP that's attached to it, because that's a whole specialized type of valuation. And then it also talks about there's a section on the finances and sort of what you should be looking for in terms of, income statement, cash flow, the balance sheet and all that. So there are sections that talk about that. And give you sort of a brief snapshot of the financial statements you should be looking for, as well as valuation and what does that mean and what different methods those are. So the book does talk about that.
I was appreciative of the way the simple way the author broke down like how you're supposed to look at a business and what you're supposed to be taking in and how you measure whether this is a good investment or not. Like honestly, this was a very helpful reference and a very helpful start. My last question is, do you think so? At one point in the book, and I underlined this, where Walker talks about, 3 possible types of businesses on these sites: junk, on the broker sites, junk, non-growth, or good. And when he said non-growth, he's talking about laundromats, car washes, and restaurants. Listen, these are tried and true stick to me. Laundromats and car washes, they like tried and true. I have a question for you and Carlos and everyone else on the call who can answer. Does it make sense to start off with one of these non-growth as a new entrepreneur with something like this, like acquiring a simple business like a laundromat or a car wash, and getting almost like an introduction to running a business, or at least acquiring one?
So my disclaimer is going to be, because I hold an investment advisor license, nothing on this call is meant to be financial advice.
No, and I accept
consult
that.
with your financial advisor. But to answer your question is, you need to consult with your financial advisor, because I don't know if that is something that's on your time horizon. I don't know if that is something that maybe you should be doing another business. So I am not going to answer that question because I don't have enough details about your finances to make that decision. I am going to say ask that question to your financial planner. But Carlos has something, who is not a financial advisor. Take it away, Carlos.
Yes, I will disclaim as well, I am not a financial advisor, but I will tell you this: in the investment space, one of the core tenets is invest in what you know, right? So even if you look at some of the greatest investors of all time, Warren Buffett primarily included in this, they will keep to that mantra. So if you're getting into a business that you do not understand, you do not have the expertise, that may not be the best business for you unless you can develop a team around you who really understands that. So I would say, as you're looking for your first deal, if you don't have a team that matches the business, you might want to be leery of that. So stick to, my advice is stick to what you really are comfortable with, what you know. And if it's like beyond what you're comfortable, make sure you have the team around you who can advise you. So again, I'm not a financial planner, and this is not legal advice or financial advice.
I appreciate that. It's just it's common sense advice, and I appreciate it.
Yeah, absolutely.
So I'm curious for my barrister buddies. What do you say to persons who are licensed financial planners or business consultants? Because I give business advice every day, but I'm not an attorney. So I'm just curious. I'd like to hear from, I heard the disclaimers, because if I was to answer the question, it would depend. So for example, if I'm buying an asset because I need a tax shelter, then I might not be buying the asset specifically because I need the cash. So that's one thing on the left. The other thing is, if I'm buying an asset, then you got to understand that when you do your personal income statement, the first asset is cash on hand, but the second asset is whole life insurance. You don't get to securities and land. So I guess my question, Ryan, is if you're stacking your deck and you say, I get this much money from my practice, and if I buy this asset, it's going to bring me an annuitized revenue. sometimes the greatest strength that you can have in acquisitions is to be able to demonstrate that you have cash flow. And see, sometimes people buy businesses specifically for the cash flow because they need to add the cash flow to their existing portfolio. So respectively, you know, I'm not an attorney, but I do. My oldest son is 40, so I got a little bit of experience in this world.
Okay, I'm gonna launch this poll because we are out of time. So if you can answer this poll for me, that would be great. And then take a look at your email where I will give you options for our next book club, which is going to be on the psychology of money, one of my favorite books, in December. And if you know of anybody, you know what makes these book club discussions so great and why I love them so much is because of the different perspectives that we have. So thank you to each and every one of you that took some time to get on this call asking great questions. Invite people who need this information, or even if they don't know they need it, tell them to get on the call, because one of the ways that you build generational wealth is sometimes you just don't know what you don't know, and you just need a team of support and people who say, like Carlos said, you can do it, right? And so, you know, I will continue to do these book clubs as long as there is interest. But let's get some more people on this call, because I want other people to become entrepreneurs through acquisition. I want other people to leave generational wealth for years and to come, and to have their finances in order. Nothing would make me happier than that. But the opportunity is here. People have to actually come on. So now that I'm off my soapbox, if you have anybody who is interested, just forward them the email that I'm going to send you. Okay, so I'm going to end this poll here, and we're going to see what the results are. And it was all anonymous here. So can you see the results? It says sharing. Okay, so I said on a scale of 1 to 5, how confident are you after this discussion to acquire an existing company? So 2 out of 7 of you said very confident, a 5. 2 out of 7 of you are sort of in the middle, and 1 of you is still on the lower side. Whoever it is that gave the 1, we need you to get back on the call, the next book club discussion that we have, and we'll see if we can't improve those numbers. But thank you everyone for jumping on this quick call, and for the engagement. And let's just continue to build this book club and discuss how we make a difference not only in our own lives but in our communities. Okay.
Awesome. Thanks so much for organizing this. It was great time.
Thank you, Carlos. All right, everybody, take care.
Thank you.
Bye.